Okay, so hi everyone. This is Sandy from eXp Realty. I'm your Hawaii real estate agent. So I have a really special guest here with me today. This is Mimi Hirakawa from Bank of Hawaii. She's a mortgage expert and is a part of the residential loan officer team at Bank of Hawaii. She has over 5 years expertise and specializes in first-time buyer programs, low down payment programs, and many more great programs. Hi, Mimi. Thanks for coming today.
Of course.
So you are here to talk about some great first-time buyer programs, right? That's so exciting.
Yes, of course. So the first one I want to go over is our first-time home buyer program. So we do offer a discount of up to 0.5 point off of your closing costs. And depending on how high your loan amount is, that can save a huge chunk off of the closing costs. There aren't any income restriction or asset limitations, but the loan amount does have to remain within the conforming limit, which is $970,800 right now. And the conforming limit can change from year to year. So that's currently what the limit is at, but in 2023, that could be adjusted. One of the other main requirements is that you can't own a primary residence here in Hawaii for a minimum of 3 years. And we will check your federal tax returns for the past 3 years to make sure that you haven't owned one, because we'll see it listed on the Schedule E if you own any other property.
Yeah, that sounds great. Okay. Anything else to boost the confidence of buyers for first-time buyers?
I will say interest rates are going up, but with that 0.5 point discount, you can save a chunk off of your closing costs. And we are offering ARM options right now, just because the interest rates are a little bit lower than what our 30-year fixed are. And I know a lot of people in Hawaii just know 30-year fixed, but with the ARM options, most people will refinance their home within the first 5 to 7 years of purchasing it. The only thing is, if you go with the ARM option, sometimes you might not be able to get that 0.5 point discount off of your point. So you kind of have to balance whether you want to save money off of the interest rate, or if you want to save money off of the closing costs. So the main thing I normally say to my clients is, did you want to save money upfront, or did you want to save money over the term of the loan? And it just depends on your current financial situation, or just how you plan to budget throughout the years.
Yeah, that sounds really good. So of course, it would be their best option to talk to you about the finances and their options, right? Sounds good. Okay, so you have another program that you were going to talk about here today. It's called the MCC Program. Can you tell us more about it and how it works?
So MCC, it stands for Mortgage Credit Certificate Program, and it's through the Hawaii Finance Development Corporation, or Hawaii Housing Finance Development Corporation. So a lot of people refer to them as the HHFDC, since that's a little bit of a tongue twister. It's essentially a federal tax credit that's meant to reduce the amount you're paying towards your federal income tax each year. So if you're approved through the HHFDC, the MCC can remain in effect for the term, like the whole term of the life of the loan. So the maximum tax credit you can receive is up to 20% of the total interest paid towards your mortgage per year. And then the remaining amount of your annual mortgage interest will still continue to qualify as an itemized tax deduction. So the amount of the credit you may qualify for mainly depends on the amount of interest you pay towards your mortgage. And we as lenders don't have control over the credit that you're granted. It goes through the HHFDC and through their approval process. So just keep in mind that the amount of your mortgage credit that the MCC is granting, it cannot exceed the amount that you're paying towards your federal income tax liability.
Right. Wow, that sounds like a mouthful, but for people, can you just recap the most important things that people should know about this fund? So it is a tax credit, like you said, right?
Yes. So you would basically file for it. It would be included with your taxes, and it's basically a credit. So it's trying to reduce the amount you're paying towards your taxes every year. There are a few basic requirements that I want to go through in order to be eligible to apply for the program. So the first one is similar to Bank of Hawaii's first-time home buyer discount, or our program. You can't have any ownership interest in a principal residence for the past 3 years, and they're most likely going to check check just to make sure that you have it through tax returns and items like that. There is a loophole to get out of that. There's different targeted areas, as the HHFDC calls it, where if you're purchasing a home that's located within certain areas of the island, then you may be eligible even if you owned a primary residence within the past 3 years. But it's certain areas, and you have to check with the HHFDC if the home you're looking at is eligible for that area. Another big thing to look out for is that if you're approved, you have to make sure that you're occupying the primary residence as your primary residence within 60 days of loan closing. So once your loan closes, you kind of have to make sure that you move in right away, because they will check. And if the home is no longer being used as a primary residence, you either have to notify the HHFDC or the lender. Just keep in mind also, if you sell your home within the first 9 years of owning it, or if you sell your home at a gain, or if your income increases above the specified level that the HHFDC has in place, then you may be subject to a recapture tax. So anytime that there's a big change in your income or a big change in where you're going to be living, it's probably best to discuss things with your CPA just to make sure that things are in line, and then you wouldn't be subject to that recaptured tax. And then one of the other main things to keep in mind is that there are purchase price and income restrictions. So for the city and county of Honolulu specifically, the purchase price limit for 2023 is $621,067. And then there's 2 income brackets for the city and county of Honolulu. So for families of 2 and less, that income restriction is $142,419. And then for families of 3 or more, the income restriction is bumped up a little bit to $163,782.
Oh, okay, that's really good information. So if anybody has any further questions about how to apply for this, then they could just maybe call you and you could walk them through the process.
So I can definitely assist them with submitting their applications. If they do have specific questions about the program, I would recommend that they contact the HHFDC directly, just because they also have the more in-depth information, especially since this program hasn't been available for around the past 2 years. Basically throughout the pandemic, they didn't have any funds available for use. So things may have changed within the past few years. So their direct phone number is 808-587-0567, and I've contacted them multiple times in the past when assisting my clients, and they've always been very helpful.
Well, that's good to know. Yeah, thank you for that. Also, I was going to ask, are there any other things that people should know about this MCC fund program? Any other important things that maybe you didn't mention before, or?
They're going to start accepting applications on January 3rd, and a lot of the information that you need to submit the application, you can get it through one of the approved lenders. So Bank of Hawaii is an approved lender that works with the MCC program. They have a list of lenders that you can go through. So if you need information on how to submit the application, feel free to reach out to me, or you can reach out to the HHFDC or visit their website. The MCC program commitments, they're made on a first come, first served basis. So if you know that you're interested in the program, I recommend submitting your application as soon as possible, just because the credits are only going to be available until they run out of funds. So once they run out of funds, they're going to cut off the application. There is an application review fee of $25. And then if you're approved, then you'll have to pay an MCC program fee of $400. So $300 of that will go to the HHFDC, and $100 of that is paid out to the lender. In regards to deadlines, if you are granted the commitment through the MCC program, you do have to close your loan within 90 days. So you kind of have to have everything ready to go and in place. But I would recommend, if you are interested in the program, just to apply and have it in place and ready to go, just because you want to make sure that you get in before they run out of funds.
Really good point too. Yeah, we were going to mention that, there is a cap to, how many people can apply, and it is a government program. So of course, first come, first serve, like you said. So those are really, really good points. Thank you so much. Do you have any last minute tips for buyers right now that are out there still on the fence, wondering about, my goodness, the rates are so high. Is this a good time to buy? What is your best advice you can give them?
I will say, even though the rates are high, I think now is a time where buying a home might be a little bit less competitive compared to even 6 months ago. So if you really find a home that you love, you probably have a greater chance of being able to purchase it just because there's less people on the market looking. If you aren't pre-qualified yet, I do recommend getting pre-qualified just to kind of gauge how much you can qualify for and just have a ballpark number. And if you do have a pre-qualification and you haven't reached out to your loan officer, I would recommend getting it updated just because the hike in the interest rates can affect how much you qualify for.
Okay. Yeah, thank you. Those are really, really good tips. I mean, too many people are out there without information, and you seem like a great source to go to. So I'm going to put your contact information right next to your photo. But what is the best way, Mimi, to get a hold of you if people want to ask questions or have them, fill out the MCC? What is the best way to reach you?
So you can visit my website at www.boh.com/Mimi, and all of my contact information is listed on there. But if not, feel free to give me a call at 808-694-8540, and that goes directly to my cell phone, and I'll pick up if I can, hopefully around the clock. But yes, I'll try to be available as much as I can.
Yeah, that sounds great. Thank you so much for your time. I really appreciate it. And this is really good information. I hope, a lot of people will be able to use this program because it's such a great program. And I don't think not many people know about it, right? Unfortunately.
Yeah, I think especially since it hasn't been available for a few years, so it wasn't even an option throughout the pandemic, but it's definitely a good opportunity to save money. Even though it is a form of a tax credit, I think any money that you can save, even if it's long term, is definitely beneficial, especially when you live in a place like Hawaii.
I agree. Okay, well, thank you so much, Mimi, for your time.